Welcome, wisdom seekers. Today we are going to talk about potentially the most important concept you need to understand in order to sustain positive financial outcomes. Can you imagine yourself achieving a financial milestone of a multi-million-dollar investment portfolio? It's a dream for many, a symbol of financial freedom and success. But what if I told you that the way you make that million and the taxes you pay or don't pay could drastically affect its real value? Maybe even be the difference between peace of mind or I'll give you a piece of my mind. That same million-dollar figure itself might be an illusion when unprepared, or it took way more than it should have to get there. Let's say you hit that magic number. But hold on, before you start planning that lavish retirement, remember the taxman cometh. The difference between $1 million earned through tax-efficient strategies and $1 million earned through conventional, potentially tax-heavy methods can be staggering. Think crypto millions. Much of it is held outside qualified plans due to the legal developments that needed to be hashed out. Now, crypto millions are potentially still in the crypto thousands. This is where the often overlooked power of tax advice comes into play. Stick with us and we will arm you with the simplest ways to shelter your investments from tax and the pros and cons of the strategies. Most people take action based on improper advice. You will make your decisions based on weighing the facts, using wisdom. Many people focus heavily on investment returns, trying to squeeze out every percentage point of growth. To find an investment that can blow up is what we are bombarded with and socialized to seek out. Hitting the jackpot is what we seek. While earning a positive return is essential, neglecting the impact of taxes can significantly erode your gains. Later, we will share a story of two investors, both achieving the same investment returns. However, one diligently follows tax-efficient strategies, while the other doesn't. Over time, the difference in their after-tax wealth can be substantial. The tax-savvy investor keeps more of their earnings, compounding their wealth faster and securing a more comfortable financial future. The knowledge on how tax deferral works and the difference in taxable and pre- and post-retirement contributions can make a huge difference in your finances over your lifetime, as we will show. Tax optimization is not a one-size-fits-all approach. It's about understanding your individual eligibility of contributions in these accounts and then tailoring a strategy that aligns with those factors. Let's make it simple. There are three main types of tax treatment on accounts: taxable, pre- and post-tax. For taxable, think bank accounts, brokerage accounts, and no contribution limitations. For pre-tax, think IRA, 401k, and a bundle of other kinds of qualified accounts that have contribution limitations. You receive a tax deduction for the contribution. The account grows tax-deferred when you are able to withdraw without penalty. It is treated usually as ordinary income and you are then taxed, so add it to any other income for that year. For post-tax IRA and 401k contributions, they are made without an upfront deduction, hence post-tax. In a Roth account, that investment also grows deferred, then potentially tax-free when withdrawn within penalty-free parameters, so you do not have to add it to income for that year. That flexibility allows you to have a lump sum of money growing deferred that does not add to income in any year you would remove it. By incorporating a little tax planning up front into your financial strategy, you can potentially keep significantly more of your hard-earned money working for you. Let's be honest, taxes aren't exactly the most exhilarating topic. They often evoke feelings of dread and confusion, leading many to relegate them to a necessary evil to be dealt with once a year. This reactive approach, however, can be a costly mistake. We get caught up in the excitement of investment returns, chasing the latest hot stocks, and trying to time the market. This mindset leads to a fundamental misunderstanding of how significantly taxes impact our overall wealth. By considering the tax implications of your financial decisions up front, you can potentially save a significant amount of money in the long run. So let's take a moment and simplify some concepts. If you invest in a taxable account, you will have ordinary income to pay on dividends and interest. When you sell those assets, either a long or a short-term capital gain. Long-term is currently most likely 15%, can be lower or higher based on income, and is debated for change constantly. Short-term is currently taxed as ordinary income. I use taxable accounts as a last choice for funds. Almost 100% of my investments are inside a qualified plan. We all want our investments to grow and flourish, but neglecting the impact of taxes can significantly stunt their growth. One of the first questions most people will ask is, should I choose pre- or post-tax contribution? It is an individual analysis that has multiple layers of complexity. I would argue that if you are eligible to contribute to a Roth IRA or 401k, that you would try to maximize it first so that you can create a nest egg of non-taxable income for later in life. That lets you have a choice when using retirement funds for purchases or income in retirement. However, sometimes it takes careful planning when you are on the verge of a higher tax bracket. You may not want to cause all your income to be subject to a higher tax liability in any given year. There are some very good calculators online that you can model these options. The key is to align your investment strategy with your tax planning goals. By doing so, you're maximizing your after-tax returns and accelerating your journey towards financial freedom. Let's dive into a compelling story that illustrates the profound impact of tax advice. Meet Sarah and David, two individuals with similar incomes, risk appetites, and investment goals. Both embarked on their investment journeys at the age of 30, aiming to retire comfortably at 65. They both diligently invested $1,000 each month, earning an average annual return of 7%. On the surface, their investment strategies seemed identical. However, there was one crucial difference. Sarah sought professional tax advice while David opted to manage his finances independently. Sarah's advisor helped her develop a comprehensive financial plan that incorporated tax-efficient strategies. She maximized contributions to her 401k, utilized tax-advantaged investment accounts, and strategically harvested capital losses to offset gains. David, on the other hand, focused solely on maximizing his investment returns. He didn't give much thought to the tax implications of his investment choices. Fast forward 35 years, both Sarah and David are now 65 years old, ready to reap the rewards of their decades-long investment journeys. Both had diligently invested $420,000 over the years, that's $1,000 per month for 35 years. Based on a consistent 7% return, they both amassed impressive portfolios. David's portfolio, with no consideration for tax efficiency, grew to an impressive $1.5 million. Sarah's tax-efficient investment strategy resulted in a portfolio worth over $2 million. The power of compounding, amplified by years of tax savings, had significantly outpaced David's returns. This stark contrast highlighted the often overlooked power of tax planning. The story of Sarah and David isn't just about numbers, it's about the transformative impact of tax advice on their lives. Sarah's decision to seek professional guidance had a profound effect on her financial well-being, allowing her to retire comfortably with financial security. David realized that by neglecting the tax implications of his investment decisions, he had inadvertently hindered his own financial growth. This tale underscores a crucial point. Tax advice is not just for the wealthy or financially savvy. It's for anyone who wants to make the most of their hard-earned money. The true measure of wealth isn't simply how much money you make, but how much you get to keep after the taxman takes his share. By incorporating tax-efficient strategies into your financial plan, you're essentially lightening your load, allowing your investments to grow more efficiently and reach their full potential. It's about working smarter, not harder, when it comes to building long-term wealth. Navigating the complex world of taxes can feel daunting, but it doesn't have to be a solo mission. Seeking professional tax advice can be your secret weapon in the quest for financial success. A qualified tax advisor can act as your financial co-pilot, guiding you through the labyrinth of tax laws and regulations, helping you make informed decisions that align with your individual circumstances and goals. Think of it as an investment in your financial well-being. Just as you wouldn't hesitate to consult a doctor when you're unwell, seeking professional tax advice can provide peace of mind, knowing that your finances are in capable hands. A skilled tax advisor can help you identify potential tax savings, optimize your investment strategy, and plan for the future. Remember, tax laws are constantly evolving. What worked last year might not work this year. A qualified tax advisor stays abreast of these changes, ensuring that you're always taking advantage of the latest tax-saving opportunities. So now let's cultivate the wisdom. Knowledge is power, especially when it comes to your finances. While seeking professional tax advice is crucial, educating yourself about basic tax principles can empower you to make more informed decisions and have more productive conversations with your advisor. Start by familiarizing yourself with common tax deductions, credits, and tax-advantaged investment accounts. Explore reputable financial websites, attend webinars, and read books on personal finance. I also like Audible since you can listen privately at your leisure. The more you understand how taxes impact your financial life, the better equipped you'll be to make smart choices that benefit your long-term well-being. Remember, your financial journey is uniquely yours. There's no one-size-fits-all approach. By seeking professional guidance and actively participating in your financial planning, you're taking control of your financial destiny, paving the way for a more secure and prosperous future. Let's share our tax triumphs. We've journeyed through the ins and outs of why tax advice deserves a prime spot in your financial playbook. Now it's your turn to share. Have you had any aha moments with tax planning? Did a savvy tax move make a significant difference in your financial journey? We want to hear your stories. Head to the comments section below and tell us about your experiences with tax planning, good or bad. Your insights might just inspire someone else to take control of their financial well-being. Remember, even small changes in your tax strategy can have a ripple effect on your long-term financial health. By sharing your triumphs and challenges, you're contributing to a community of empowered individuals, all striving for financial wellness. Let's break down the stigma surrounding taxes and make financial literacy contagious. Share your story in the comments and let's learn from each other. Our exploration of tax-savvy financial strategies doesn't end here. This is just one stepping stone on your path to achieving lasting financial well-being. Remember, managing your money effectively is a marathon, not a sprint. If you're ready to delve deeper into the world of smart financial strategies, I invite you to explore my other videos. We'll cover topics like budgeting, investing, retirement planning, and much more, all designed to empower you to make informed decisions about your money. Don't let the complexities of finance intimidate you. With the right knowledge and resources, you can take control of your financial future and achieve your goals. Remember, financial wellness is within your reach. Start your journey today, and let's build a brighter financial future together. Thank you very much for watching.